So I get asked tons of questions as it pertains to business structuring. One of the questions that I get asked is, what is the best legal structure for your business? So this would be structure such as LLC, corporation, sole proprietorship. It's not a structure, it's a tax election. So let's talk about it. So I always tell people that are new to business, that are just starting out, that don't have any clientele, sole proprietorship is typically the best structure to start a business. The reason being is because with some of the other structures, there are requirements in order for you to be in compliance. So for a sole proprietor, it's very low cost to start up. You don't really have any type of requirements as it pertains to filing like any reports. When you file your taxes, it's pretty straightforward. Being a sole proprietor means that you are a sole owner of a business. You could actually register your business name and operate that business as you, the business being as one. Now, a lot of people, they choose not to go this route because they probably have seen something saying you need to create an LLC to separate you and the business from each other. We'll talk more about an LLC, when that may be appropriate, when the appropriate time for you to structure your business as an LLC. But remember, if you are new to business, if you don't have any clients, if you are just looking to get started, you want to register that business name, you're wanting to start the business with at a very low cost status, sole proprietorship may be for you. So let's talk about starting an LLC. So I'm sure you've seen a lot of information. Everybody has told you if you start a business, you need to start it as an LLC. But one thing people don't realize is LLC is not one size fit all. If you are just starting out, as we just talked about, as a sole proprietor, you may not need to be separate. The biggest thing about setting up an LLC is that you are protecting your personal assets. So the first thing you need to think about is, do I actually own any assets? Assets are things such as cars, homes, maybe jewelry, maybe paintings, things that have value. Because what happens is that in the event that somebody takes legal action, they may be able to access your assets. So this is the reason why if you don't have any assets, then you really don't have anything to worry about. There are some other things that you can put in place to protect you, such as general liability insurance if you're bonded, things of that nature. And look, this is not legal advice. So another important thing is that you need to have an attorney to talk to. See, how can I protect myself outside of an LLC or in addition to an LLC? So if you set up an LLC, this typically means that your business is operating. You have clientele, you have assets, you're generating revenue. So you have money coming in, you have money somewhere stashed away, you have assets. You don't want anybody to be able to get access to your assets, to the money that the business has acquired. So this is a good status. Starting an LLC is a good structure if you actually are generating revenue, if you actually have assets, if you are trying to separate yourself from the business. Now, keep in mind, LLC does have requirements. You do have to file an annual report with your Secretary of State. You also will have to report your income and loss when you file your taxes. Just as it is with the sole proprietorship, you just report your income with your personal taxes. So you report your business income with your individual or your personal taxes. If you're married, filing joint, you still report that income. You just will attach a Schedule C to your individual tax return to report your business income or loss. LLC is pretty straightforward, but it is a step up because you do have requirements. Annual reports, they are due every year. It's basically you telling the state that I'm still operating my business, I'm still the owner of my business, so that they can actually keep that business open. You will own the name in the state or states that you are registered in. LLC, there are some tax implications. If you are set up as an LLC and a sole proprietor, you are required to pay self-employment tax. Now, let's talk about S Corp. You probably have heard about S Corp. S Corp is not a structure. It is a tax election. So an LLC or a C Corp can elect to be taxed as an S Corp. It is a hybrid between an LLC and a corporation. You do have to file a separate tax return. So now you are moving off of your individual taxes to a separate tax return, a 1120S. This is where you will report all of your LLC's income and loss. So S Corp is still an LLC or maybe a C Corp. This is where you are reporting your income and losses on your taxes. You are now required to pay yourself as an employee. This is the biggest, misconception that people just are unaware of, and then they just downright don't want to buy it. So when you elect to be taxed as an S Corp, you probably have seen that you will get rid of self-employment taxes, the taxes that we just talked about. You are required to pay yourself if you are owner. So any shareholder owners, they're required to put themselves on payroll, pay themselves a reasonable salary. So some people will set up an S Corp. They will try to pay themselves dividends so that they don't have to pay taxes. This is a huge no. If you are audited, you will be in some of the biggest trouble with the IRS. They are very strict on payroll taxes and just payroll. So if you are evading taxes and you're not paying payroll taxes, you can be in big trouble for that. So you don't want to do that. So make sure that when you set up an S Corp that you are working with a tax practitioner, an enrolled agent, a CPA that specializes in tax laws that can walk you through this process. Make sure that you are paying yourself a reasonable salary, that you have payroll set up properly, and that you're having your taxes withheld now automatically from your payroll, so that is now being taken care of. The beautiful thing and the difference between and say a sole proprietor or LLC is that you're able to write off your salary. So your reasonable salary that you're paying and half of your taxes or a portion of your taxes, you're able to now deduct this from your business income. So this is a huge benefit. So typically in comparison to the sole proprietor and the LLC, you aren't able to deduct your pay. Any contractors that you pay, you can deduct that, but the owner's actual pay, you can't write that off. But as an S Corp, you're able to deduct your pay. So that's a huge benefit for me. And then there's the C Corp. So the C Corp is totally separate. It's its own entity. It's totally separated from the owner. There's an individual taxes. There are compliance. So you do have to file your annual reports, and you have to file your taxes each year, separate taxes, 1120. And you are required to run payroll for the shareholder employees and have your taxes withheld. So you're having quarterly taxes, you're having annual taxes, you are having annual Secretary of State filings that you'll have to file. So it's a lot more involved than maybe, being a sole proprietor, where it's pretty straightforward. You still have to do all of the things as far as reporting your income and paying taxes, but you are required, it has to be a reasonable salary as well. But there are great benefits with being a C Corp because you are totally separated from the business. So if the business owes any debts, you are not responsible for it by any means necessary. So that's a huge benefit. And so what I always recommend is that businesses start from the beginning level, you work your way up. So